There is a new proposed tax law for America in 2023 that will send taxes to the moon. A lot of people are pissed at this regulation, like Kevin O'Leary said that it goes against what this country was made of. In this video, I'll explain to you what these taxes are and how it will affect your pocket, so stay tuned. Hi there, welcome to your channel, The Foreigner in America, where I teach locals and foreigners everything related to money and personal finances, including investing in the markets, cryptos, real estate, and businesses. So if you're someone like myself who wants to achieve greater wealth in life, you don't settle for pennies, but for Benjamins, and you love money, please subscribe to this great channel and hit that bell so you don't miss any one of my weekly videos. Also check out my Instagram and TikTok at The Foreigner in America and my blog under the same name. So without further ado, let's begin. These increased taxes always happen when there's a change in office. No surprise there. It's part of the proposed changes from the president since he was in campaign. For example, the big one, corporate taxes. When a company does its P&L, the profit and loss statement, they have their revenue minus all their expenses, which is payroll, materials, bills, etc. And at the end, you have your EBITDA, or your earnings before taxes. After you have your earnings before taxes, you gotta pay the taxes. So today, companies pay 21% of corporate tax. Do you think it's low? Well, compared to other developed countries in the world, Canada is 15%, Great Britain is 19%, Poland is 19%, Czech Republic is 19%, and Finland is 20%, just to name some. In this map here, you can see the entire world by their effective corporate tax rate of 2022. The redder, the higher. So no, the US is not low in corporate tax compared to the rest of the world. In fact, before Trump changed that in 2016, America had one of the highest corporate taxes in the world with 35% tax over $10 million. In one point in time, in America, corporate rate was as high as 59%. That's crazy. What happens if you have a corporate tax rate that is crazy high? Well, you do whatever you can not to report EBITDA. There are financial experts out there who know exactly what I'm talking about. You gotta spend the money before it lands on the EBITDA on corporate projects. So an increase from 21 to 28%, will it be beneficial or harmful for this country? Let's talk about that. They say that it will reduce GDP by 0.7% or $160 billion. That stocks will decline, more than 130,000 jobs will be lost, and that loss is gradual for 10 years. The good thing is that this proposal only lasts for as long as this administration lasts. So every new president comes in with new ideas. The tax revenue that this will produce is $694 billion over 10 years. So long-term incomes will drop by 1.5 to 2%. And studies show that raising rates causes harm to growth. So why do you do it? The other way they want to tax people is by unrealized capital gains, which many say it's unconstitutional. They say that because taxes should be applied to all people in a certain state and not forced to some. No one wants to pay taxes on their stocks they didn't sell, or cryptos or NFTs, or the real estate that went up in value, which we are already paying, and it's called property tax. And here in Texas, it's close to 3%. If a business owner doesn't have the money to pay the tax, he needs to sell part of his share in the business or give out more stock and lose control of the company. And if you really want to tax unrealized capital gains, then how much? It will never be enough. If they say it's 10%, then it will not be enough. So it will go up to 15, 20, 30, and then it will make no sense to own any asset and hold it in time. And then you have the worst tax of all, the federal income tax. This is a tax that applies to all personal income or Pass-through income, meaning you own an LLC or an S corp, and all your revenue falls into your personal tax return. So, depending on your state, whatever you pay on federal income tax, you have to add FICA, which is Social Security and Medicare, and local and state taxes, which in places like California could go all the way up to 13% more. So if you make a personal income of greater than $500,000, your rate will not cap at 37%, but will go all the way up to 39.6%. This is the way it was before Trump brought it down in 2016. So no surprises there. President Biden said that it won't affect anyone making less than $400,000 a year. My question is, are you punishing people who make good money in America? If you are average and make 50 or 60K, then you're fine. Inflation is murdering you. But if you make over 400K, then you get hit by inflation and greater taxes. And don't be surprised that everyone making over 400K will be involved in stocks, cryptos, and real estate, or have a business, which they could also get hit on the other taxes. Remember, the 28% corporate rate is only for C Corps. All the other businesses fall under personal income. This proposed plan of raising the federal rate to 39.6% will raise $186.8 billion over 10 years. And this, compared to the trillions of dollars spent or printed, is not enough. The bill has a lot of pages of taxes and taxes everywhere, but the one that also caught my attention is the 1031 exchange being affected if you make more than 500K in profit. And this will hurt real estate developers big time. Imagine you want to buy an apartment building. 10 apartments, need some work, bad management, half vacant, in a good location. Seller says he wants $1.5 million for it, and you bring the price down to $750, since the net operating income, the NOI, is not there. You put $500,000 in repairs and bring it up to speed and hire new property management. Rents go up and expenses go down, place is full, your NOI is high now. So under the same cap rate, your building is now worth $2 million. So you sell it, you do a 1031 exchange, defer taxes, and buy another building that needs work, who is now bigger. That's the way people get really rich with commercial living real estate. And you might say, Jaime, they're never paying taxes. Yes, but they're paying taxes on the income. All the rents they receive pay taxes. The property management company pays taxes on their income and employees. You're turning a bad building into a nice building, which helps the city and the people who want a nicer place to rent and live. It's a win-win situation for everyone. The government is not gonna do it. So if an investor didn't have that vision for the building, it would have been an ugly building for 100 years. Well, now every time this investor sells a property to buy the next, he will get hit by a big tax bill, probably 20% if it's considered capital gains. This means that for him to make more money and compensate that 20% loss, now he needs to be more stingy on the materials he uses on the building and raise the rents a lot more. So who loses? Government? Nope. They got their taxes. The investor? Nope. He will tweak numbers to make it profitable. It is the people renting the place. Yes, that person who is making 50K and is trying to rent a decent place in a decent location and cannot afford to buy. Allow me to give you my 2 cents on this topic in my foreigner insights for this video about the taxes going to the moon. Taxation is inevitable. It's always been. It's the way to fund the country, and maybe you are not aware of it, but you pay half your income in taxes every year. Between federal income tax, local and state, FICA, sales tax, property tax, capital gains tax, and other taxes, it's half your income that leaves your pocket in the form of tax. Of course, the more you make, the more you pay. If you work on your own, you pay an extra 7.65% in FICA. Yes, you have deductions, but it comes to a point where you can't deduct anything else because your income is too big. As Kevin O'Leary said, don't punish people making good money. I want to make 7 figures a year. And that doesn't mean I have to sustain everyone making 30K or less. The Robin Hood situation doesn't work, except in the movie. A person making 400K or more in personal income is valuable to society. They have great jobs which control a lot of people. They manage businesses. They invest in the stock market, which helps businesses. They buy real estate, which helps renters. They do a lot for this country. Same for a business. So there is a reason why many countries who are developed have a lower corporate rate than 20%. It attracts businesses, and people have a motivation to start one. Being taxed 50% on your business demotivates and kills innovation. And what it really does is people finding loopholes in the tax code not to pay the taxes. The problem is corporations can find loopholes, individuals can. They get the full sword. This video is informative, and I'm not criticizing anyone on these decisions. But through history, we have seen that lowering taxes has been more beneficial to this country than raising them. So I hope this is considered for the future years. But remember, take control of your life and take control of your money. So thanks a lot for watching this video. If you enjoyed it and you found useful information, give me a like and subscribe and hit that bell so you watch all my videos as soon as they come out. So have a great day. Don't lose any money, and I'll see you next time.